Church Dwight is a leading manufacturer of baking soda. Let's move on to financial indicators. It can be seen that this company has some of the best indicators, namely consistently increasing total and net income. It has a low amount of debt compared to its assets and a steady trend of share buybacks. I rate the company at 7 out of 10. In my opinion, the company is doing everything right, namely buying excellent quality products, then investing money in acquiring companies that can reduce the cost of this product and start promoting it to make it a popular brand for their users. And as soon as this product becomes number 1 or number 2 in its field, they start all over again but with a new brand. Thanks to this approach, the company has more than a dozen brands that bring them profits. I really like this strategy because if we compare, for example, the company Kraft Heinz, it has several great brands, but most of them are below average quality, which is why the company has been stagnant for several years, while Church & Dwight has all its brands excellent. However, the company also has several drawbacks that cannot be overlooked, and the main one is competition, and it is tough. The company has to compete with giants like Pfizer and Johnson & Johnson, which are big giants with their advantages. That is why even though the company has leading brands, it cannot afford to make big money on them because if it starts raising prices, most of its customers will switch to competitors' products, which is why the company has to carefully monitor its users and keep prices within reasonable limits. As for the company's price, today it can be bought for approximately $107 or for $26 billion. Although I consider the company slightly overvalued, I am willing to pay for its potential. Currently, most of its profits come from the US, which means it has the opportunity to expand into international markets. Although the company is not yet ready for this, I am confident that it has a bright future. Therefore, if you buy the company for the next decade, you will definitely make money. As for the short-term perspective, this is not a great option because due to high inflation, everyone has to raise prices for their products, and unfortunately, its competitors Pfizer and Johnson & Johnson have more advantages because due to their size and infrastructure abroad, they can afford to lower production costs and minimally raise prices for their users. Unfortunately, Church & Dwight does not have this opportunity due to its size, so the company is likely to face tough conditions over the next few years, which will most likely lead to a decrease in the company's net income. Therefore, in the short term, it is not a good business to buy, but if you use this opportunity as a long-term investment, I am confident that this is a future company that will grow in my eyes to 10 out of 10, so I will overpay, but I will buy it today and hold approximately 5% of total assets.